Hello, I'm Rhonda Porter, licensed loan originator at New American Funding and author of The Mortgage Porter, here with our weekly mortgage update for February 5th, 2024. On Friday, the jobs report came in a lot hotter than expected. In fact, there was almost twice as many jobs created per January's report. And there are some experts that kind of wonder just how accurate this report is. But bottom line, it did come in as inflationary, with wages coming in stronger as well. And so when we do have inflationary data, that does tend to push mortgage rates higher. And last week, we also had the wrap up of the Fed two-day meeting on Wednesday, and where after the meeting, Chairman Powell clarified that he did not see a rate reduction coming at their next meeting, which is going to be in March. And again, on 60 Minutes on Sunday, Jerome Powell was interviewed, and at that interview, he also reiterated that March does not look likely for a rate reduction to the Fed funds rate. So the next meeting coming up will be in May. Odds makers are really reducing that for a chance for rates to come down at that point in time too. So we'll just have to wait and see. It might be later summer. So today, Optimal Blue is showing rates from February 2nd, so they are lagging, being around just over 6.5% for the 30-year fixed. But what you have to remember is, again, these are lagging rates. That it's based on an average of about 40% of the lenders out there. And so it's really not accurate. It does not mean necessarily that you would get this rate or I would get this rate if you're going to lock right now. Because for one, these are Friday's rates, and you can't lock on Friday's rates on Monday. And also it is an average. So the different credit scores, how the rates price, are there points, are there, what's loan to value? So this is just to give you an idea of how rates are trending. And if you look at the line, you can see that it's really been quite bouncy, a lot of volatility with that. So, but I do really like seeing rates under 7% for sure. And hopefully they continue to trend that way. But today we're seeing something a little bit different. I'd say this morning, mortgage rates are having a case of the Mondays. So we did get an alert to lock earlier from one of the services I subscribe to, MBS Highway. And as I'm looking at this, they're improving slightly. I'm looking over my monitor right now. But we still are in a position where rates are higher today than probably what you could have locked in on Friday, just slightly. So I grabbed this screenshot at about 11:15 today, February 5th, 2024. And at that point in time, mortgage-backed securities were being hit by about 33 basis points. And so that puts lenders in a position to reprice for the worst. Right now I'm looking at it, and we're down about 26 basis points. So it's a slight improvement. I've not received, I'm looking through my emails here, a notice yet from my company that we've repriced since rates came out this morning. So, and I hopefully I don't jinx myself for that. But again, you can see that mortgage rates have just been very bouncy and volatile today. And as far as this week's economic calendar, today we had the ISM Services Index that was released this morning, and the Institute for Supply Management Services activity came in hotter than expected at 53.4. And so that could be viewed as slightly inflationary as well, with parts of that report. And Wednesday, we're going to have the MBA mortgage apps, a 10-year Treasury auction, then on Thursday, initial jobless claims, and a 30-year auction. So I hope you have a great week, and if I can be of any of assistance for your mortgage needs, please reach out to me. Even if it's going to be a year or more away before you're getting ready to buy or refinance, I'm happy to talk with you. Talk to you soon. Bye-bye.